The illusionist made it look like prosperity, but it was just a sleight of hand. Corporate debt poured into the stock market like stage fog, thick enough to obscure the setup. Sound familiar? I don't know. We'll see. By 1928, the public was finally invited to the show, and that's when the real wealth transfer began. Markets hit new highs, dazzling the crowd. Ooh, does that sound familiar to you? The 1920s weren't just roaring, they were choreographed. Speculation? Well, guess what? That surged inside and outside the banking sector. Banks used non-bank affiliates like sleight of hand, lending into the frenzy while pretending to play it safe. 95% of all stocks were bought on margin, which means they borrowed. The public was borrowing to buy these stocks. Insider trading, market manipulation, rampant. Real estate and oil, overvalued like props in a magic act. But the audience believed it, and they bought into it. So let's see what that looked like then. Because it's always about risk transfer, always. From the few, from those 1%, to the many, to the public. Then and now. Increased public interest in securities trading is chief cause of Wall Street activity. Those are the headlines from back in 1927, 1928. But those in the know, well, what were they doing? They were selling into the unsuspecting public. Can you see that risk transfer? Because it's happening again. And the market in 1928 broke practically every single kind of trading record on the books. Sound familiar? Because happy days are here again in 2025. Are you ignoring the warning signs? And then, like now, gold was signaling the crisis ahead. And with respect to credit conditions, look at this. In 1928 has been an extraordinary year. Woohoo! The outflow of gold, however, which began in the autumn of 1927, continued during the first half of 1928. And that caused a reversal in that easy money situation that had prevailed for several years. And that benefited insiders to the detriment of the average person because they didn't know that gold was being drained out of the system. And so when enough risk has been transferred to the public, and the public is fully integrated into the new system, then the next crisis will unfold. Because overvaluations don't last forever. They can last longer than you could think, but not forever. And when they collapse, who is it that pays? It's the little guy. It's the normal guy. But not with us. Because at Zang Enterprises, our sound money strategy follows a repeatable pattern to protect your wealth and position you for opportunity. And it's built in layers. Because when you don't know the truth, you'll keep falling for the same old lies. And this one, this next crisis, it was engineered to shift power away from the people. Now, here's the 20-year snapshot of the new system. Look closely. Private corporations got that new money first. That's when it had all of its purchasing power. Their debt was, magically converted into Federal Reserve notes, debt money, that flexible fiat that you now work for. It's flexible because they can take its purchasing power out. These corporations didn't want to pay you more. They wanted to pay you less. but they allowed inflation to do their dirty work. Rising prices masked stagnant wages, and you cooperated without even knowing the trick. Then came the twist. The credit punch bowl was yanked from the public speculators. Markets crashed. 1929. But between 1929 and 1933, Federal Reserve notes dropped in supply. Why? Because gold dropped in their reserves. That's the fiscal responsibility that I'm talking about. But that's also deflation. The curtain, as you will, falling on Act 1. But the illusionist was not done. There's only one way to fight deflation in a fiat money system. Flood the stage with more inflation. That is exactly what came next. So let's follow that money trail into Act 2. Now look, you cannot inflate on a gold standard. It requires fiscal responsibility and puts in limitations. So they had to break it. And in 1933, under emergency powers, FDR confiscated the public's gold and shattered the chains that kept money creation in check. The illusion? That it was for your protection. But the real truth? Well, now is the time to take our truth back and our power. Because if just 3% of us convert this garbage fiat into sound money, gold and silver, I believe we have an opportunity to take our power back. That's the global Citizens for Sound Money movement. Because the alternative, well, look at it. It's engineered. It's always engineered. But what they have in mind for us now, it's terrifying. Now is the time to make a difference. So once gold was out of public hands, it was revalued. And now the debt-based system of inflation, well, that could really expand. But they can't put it out there all at once. So just look at the growth of that fiat money. There's a lot happening in this chart, and it's not just history. It's a blueprint. So if you want a copy of this, call your strategy specialist. They will send it to you, but I suggest you look really closely because first, I want you to look at the Treasury debt labeled hoarded. That means that it was created but not yet released to the public. Early on, there was a wide gap, see it, between hoarded and active treasuries. But by 1962, that gap, look at it, it vanished. And it hasn't ever, and nor will it ever return again. Now, shift your eyes to the explosion of private and commercial debt converted into, ta-dum, Federal Reserve notes. That's fiat creation on overdrive. The illusionist was busy behind the curtain turning those IOUs into currency and flooding the system and getting you to think that everything was just as it's always been. But here's the twist. Even though the public lost the right to redeem dollars for gold, foreign governments still could. And those black areas on the bottom, that's gold flowing out to meet foreign claims. Now, we've experienced a run on the dollar today starting in 2013 with China and Japan. But back in those days, by 1958, the run had begun. And by 1960, we had shipped out more gold than we had in deep storage for that purpose. So we had to start using the gold that we had for our ability to create more debt. Why? because the U.S. wasn't honoring its promise to hold the dollar's value at $35 per ounce. We actually reneged on Bretton Woods. But guess what? The world noticed. And we weaponized the dollar, spreading inflation globally. Does any of this sound familiar? How about how we use the SWIFT, the global payment system, the dollar global payment system, against Russia? Now ask yourself, is today's de-dollarization movement being stalled by the Genius Act? At an artificial market for dollars and treasuries are being born again. I can't tell you whether or not that's going to work. We'll find out. But the Bank for International Settlements already told us gold kept at home is not subject to political manipulation. That's not just a quote. That, my friends, is a warning, because we are on a new monetary path. If we do nothing, we'll end up in a surveillance economy where you will own nothing by 2030, just like Jefferson warned and just like the WEF warned. But if we come together through the Citizens for Sound Money movement, we can demand our power back. The pattern is clear. The question is, will we act in time? And if we don't, if we're still at least inside of local community with a sound money platform, we will be in a much better position than, frankly, I hate to say this, but than anyone else. Because let's go back in 1914 and again in 1933, the U.S. revalued the dollar against gold. Overnight. Each move created more fiat and diluted the purchasing power of the dollars out there. By 1960, the dollar had lost 67% of its value. You see what happens when you give your power away? You give them an inch and they take a yard. But it dropped from purchasing $1 worth of goods and services to just 33 cents. That reflects all of that money printing that our government and central bank did since 1933. Even after gold convertibility ended for the public, foreign governments could still redeem their dollars for gold, and that's exactly what they did. So by 1960, the U.S. had already shipped out more gold than it had held in that area, gold to redeem dollars. Now, doesn't that sound familiar? Think Russia and the SWIFT system. That was the dollar being weaponized, and it sped up de-dollarization. Desperate governments do desperate things. I don't care what year you're looking at. It's true for all of them. And the world saw how we were inflating away the value. And it started cashing in their dollars for gold. And that run had begun. They didn't teach you any of this in grade school, did they? But don't you think you should know it? Because this is the truth. The world saw through the illusion. The U.S. was printing money to fund the Korean and the Vietnam Wars, breaking its Bretton Woods promise to hold the dollar's value at 35 to an ounce of gold. Inflation wasn't just domestic, it went globally. This chart shows the gold drain in real time. Foreign governments were pulling gold out fast, repatriating. They needed to. Why? Because they no longer trusted the dollar. And we're seeing that lack of trust happening in sovereign debt today. It was a global vote of no confidence. And with the current global sovereign debt, long-term bonds spiking, it also is showing a loss of confidence in global governments. But then the illusionist mask was slipping. In 1971, Nixon called the end of gold convertibility the most important monetary move in history. We just heard those same words issued in the legalization of the stable coins. Nixon told Americans, just buy American. I remember it. I was there. For those that are my age, don't you remember? What did he say? He said, just buy American, promising that inflation wouldn't touch us. It's not true, obviously, but behind the scenes, Fed Chair Arthur Burns was pressured by Nixon to keep rates low, fueling the very inflation that Nixon claimed to be fighting. Importantly, that moment handed inflation control to unelected private central bankers. Could that be why in 1971, the average wage earner that made $10,500 a year could support a family of 4 with one wage earner? Yet today, 2 wage earners at the average wage of $68,000 a year are living paycheck to paycheck with a rapid decline in living standards? Let's fast forward. President Trump's push to lower rates echoes Nixon's playbook in 1971. And are you ready for even more inflation?